Hey traders, John Hal here, officialjohnhal.com, and in this video I'm going to show you some awesome way. I'm going to share with you one technique on how you can use this to learn how to read the charts much better than you are right now. So let's get into it. Alright, so let's get straight into it. Anything I do say in this video is general advice only. This is not a trading system. This is not a setup. This is not nothing else. This is just a trading technique you can use to learn how to trade the markets better. Make sure you're doing the right things for yourself when it comes to trading. This is not a disclaimer. This is just be intelligent. If you're going to trade the markets, trade maybe a couple % of your account at one time. Just be smart. That way, don't trade half % of it. Don't trade half of your account and stuff like that. It's just not, it's could be smart, but there. Make sure you're trading systems that you know what you're trading, and just be intelligent about what you're doing. You know what I mean? And don't rush the market. The more you rush, the longer it takes to get there. The more you work hard and find these setups and do that sort of stuff, the faster you'll get there. You know what I mean? So work hard, but don't rush it. So what I want to talk to you about today, guys, is a trading technique that I don't think I've actually learned off anyone else. I think I've just learned it by myself, by looking at the charts over the last 10 years or so now. And what it is, it's strength in moves. Strength in moves. Now, when there's a strength in moves, when you're looking at the chart, if we have, generally what we have is if we have strong buyers, weak sellers, right? Then we generally get strong, then we generally get strong buyers, right? Same if we have strong sellers, weak buyers, then we generally get strong sellers. So understanding this formation here is, it's very, very crucial to show you what's actually happened in the market. So let's actually go back in time here, and I want to show you, an example of what I'm talking about. So viewing the markets there, okay. Let's just say, for example, we were trying to view the market and see what was going on here, okay. We had this sort of big strong move down through here, big strong sellers, right? Strong sellers move to the downside. And then something, okay, then what we're looking for is we've had strong sellers, so we're looking for the buyers to be weak. Were the buyers weak? Definitely not, right? The buyers came right out and they were strong. So this is not giving us a clear signal. This is not giving us a clear signal that one side is dominant than the other. This here is where the market's fighting out, right? Strong sellers, strong buyers. They're fighting it out. Now look what happens here after this period through here, right? We had this strong selling period up through here, as you can see that. Sorry, strong buying period up through here, right? But what sort of phase do we go into? We go into a strong selling phase, a strong buying phase. But look what actually happens here. Okay, we're looking at the strength in moves all the time. So we had this strong buyers through here, and then as you can see, right, from there to there, we actually had this up move, but as you can see, right, this up move was weak. So we had this strong buyers followed by weak buyers. Now, when that happens, you're likely to get some selling movement. As you can see, that's exactly what happened. So if you have strong buyers, and then suddenly those strong buyers are going into weak buyers, you think, hang on a minute, these buyers are very, very weak. Of course, you think, okay, if the buyers are very weak, now likely to get into some downward selling pressure. That's exactly what happened. And you can see here, right, then the market ran back up, had some strong buyers. So whenever you're looking at the chart, itself, always try to be gauging what's actually happening with that chart when it comes to strong buyers, weak sellers, strong buyers, weak sellers. If I look at some, I look at some indices and stuff like that, and obviously looking at the S&P 500 and all that sort of stuff, and the Russell. What you're looking at here, like this is a great example of what I'm talking about here now, looking at the Russell, right? What do we have here? You can see here, right, we had this sort of strong selling period through here, right? And then we had this strong buying period through here. But look at this selling period through here. This selling period through here, can you see how this selling period through here is a lot weaker than this buying period? What you want to do is you want to try and compare the moves. Now sometimes you're going to get very ugly, so you're going to go up and down and up and down and up and down, and sometimes it's very ugly like that. You know what I mean? So I understand that, and sometimes it's harder to read. But what you're doing is you're trying to see what is happening in the strength moves. And sometimes if you can't do that, then you go to the weekly chart if you can't view what's happening with that. You go to the weekly chart. But what you're doing is, especially right now, for me right now, I'm saying, okay, if I'm looking at the S&P 500, I'm saying, okay, we had these strong buyers, but then the sellers were weak as well too. If we get a breakup through here, we're likely to run to up here. Make sense? So that's what I'm looking at. You see, look at the last selling leg, look at the last buying leg. And when that happens, okay, who was more dominant out of that? Are we getting a clear defined dominance? And here we are, right? We had these strong buyers and then weak sellers. We didn't get strong buyers and then strong sellers, did we? No. We didn't get strong buyers and then weak buyers, did we? No. So see, there's different combinations here that you need to keep an eye out for and flow with the market. Here we're getting strong buyers, weaker sellers. So if we do break to the high side, that's showing me that, hey, this dominance, this strong buyers, weak sellers. If there's more buyers than sellers, if the sellers are very weak, guess what? The buyers are likely to take it up again. Make sense? And that's the same for the downside. If you had strong sellers and then weak buyers, you're going to have strong sellers. If you had strong sellers followed by weak buyers, strong sellers followed by weak sellers through here, then you're likely to get a reversal through there. Make sense? So anyway, guys, this is just a charting technique that I like to use all the time, especially like right now on the Nasdaq, on the markets. I'm saying, okay, where's the strength in moves? Because if the strength in moves are very, very obvious, sometimes they're not like over here, but if they're very obvious, then that can actually show you where the next move is likely to be, because based on the dominance, okay? And that doesn't work all the time, but it just shows you what's likely to happen moving forward. If you'd like to know more information about how I view the markets, there's 12 videos, 12 hours long, teaching you charting techniques, more charting techniques like this, mistakes, trading systems, money management, everything you can think of to help you become a good trader. Click on this image up the top here. It's going to take you to that page. John Howell here, official on how.com. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.